Lots of questions for you. Let's take the first one.
I am Himanshu Rawal, and my question is, are guaranteed products the answer for insurance needs in volatile markets?
Okay, this is, before you answer his specific question, another question that I wanted to ask you is that we come across lots of even ULIPs. Like we've always known that the traditional endowment products gave you a prefixed return and it was guaranteed in many ways. But since a ULIP is a market-linked product by definition, how does a ULIP ensure guarantee?
A ULIP is a market link, that's the first thing. And I think it's the innovation part of it which allows you to bring in that guarantee. I think while people would like to get the best out of the market, would like to get those phenomenal returns that you hear about and people talk about, at the same time I think the risk aversion factor which lies in everybody also says that my capital at least should be secure.
Right, everybody I meet has this tendency that give me the return but I don't want to lose my money.
Absolutely, absolutely. So I think,
so what innovation does ULIP do that it cracks this?
I think it's the way that you invest. If you look at a ULIP that would be giving you guarantees, I think one of the first thing would be that the investment philosophy of that particular company or that particular fund would be oriented towards being much more conservative than others.
Which means more in debt than in equity?
Which would mean that firstly, yes, there would be the fund manager would have the liberty of being able to put a large amount in debt. And he would keep taking a call, and when he wants to move to a guarantee, it would be that he would try to move more and more of the funds to the debt side when he thinks that those guarantees have been reached. So that's the primary way to manage and give these guaranteed returns. So either you have a capital guarantee or a return guarantee, and you have your philosophy accordingly put in. So security, the security of the amount of the investment amount becomes the prime concern of the investor, of the fund manager, rather than the returns. You could have, basically for an insurance company, earlier you were asking about the philosophy, there could be three things. It's liquidity, it's returns, and it's security of the basic capital. So these three things would primarily drive all the philosophies. So in this particular case, the security or the conservation of the capital takes prime position. So that would be the first, even before returns or liquidity in this case.
So what you're really saying, Deepak, is that for any investor who is buying a ULIP, for him or her to presume that I am getting a guaranteed return through 100% equity investment is not the right way to look at, right?
Not the right way to look at it at all. And I think another important thing is that you're going to get the return or the guarantee pertaining to that particular fund.
Correct.
Not the whole market in general. So it's it's with specific reference to that fund.
But this is something that any investor should keep in mind before opting for guarantee, because equity cannot guarantee you returns, right?
Absolutely. And I think another thing
has innovation but not a magic wand.
Another thing that you should need to be also cautious about is that whenever you have guaranteed returns, the idea is that you have only one fund. So it doesn't come with the switches which you were talking about earlier. Correct. Because then it has to be in the hands of the fund manager completely to be able to ensure that his investments, the way he handles it, does keep that guarantee intact. So you would not have a choice of funds at the back of it so much.
I think you really explained that very well. Let's take the next question for you.
My name is Hussain Mustafa. I'm 25 years old from Saidinagar. I have a ULIP policy. I want to know if it's still necessary to buy term insurance policy.
That's an interesting question, because we do keep hearing that a ULIP has a built-in insurance cover which is flexible in nature. So therefore, would somebody need a term if he already has a ULIP, or should he just add on the cover within the ULIP?
I would just take it back a little bit. First of all, I would like to say that you need to decide how much insurance do you have, and is that sufficient? That's the first stage from where you're coming in. Now, ULIPs normally offer you a range of insurance cover from something like 5 times the premium that you pay to up to 50 times also. So there is that range. So if you have a ULIP or you're going in for a ULIP, I think the best thing would be to structure your insurance requirement within this range. Even if this fails to meet your insurance requirement per se and you want more insurance, then I think it's time to see what is the best way to get that insurance. A pure term life or yet another ULIP. Or yet another traditional insurance policy which would guarantee you returns in a different way, in the traditional way, and which also might help to diversify your portfolio that you have linked with your insurance policies. So it's these kind of choices, but definitely if you have a ULIP, first exhaust the entire available insurance margin.
Is the insurance part of the cost within a ULIP equal to what I would pay if I bought a term cover aside of the ULIP?
Not necessarily. Not necessarily. They're both differently structured. And it's not purely that, though the core mortality charges.
That's what I'm talking about. The insurance cost,
yeah,
not the investment cost.
Yes, but that's fine. But when you look at a ULIP as a whole, the way it is structured, and with the new cap on charges that's coming in, what an insurance company can charge in terms of the fund management, in terms of the policy administration charges, all gets capped within the new regulation on cap on charges. So it makes it that much more beneficial. And you would see differences, but you can't, for a person who's buying an insurance policy, he'll not be able to slice it saying, okay, if this is what this company sells for a term insurance, I can just slice that out of a ULIP and that means the rest of it is investment.
But is it by and large in line, or am I losing out if I don't buy it directly as a term life cover?
No, I think the better option between the two, since it comes with an investment return, is always a ULIP. And pure term, let's also face it, buying pure term, there are very few people who want to buy term in a life insurance cover and say that at the end of it, I don't want my money back. This is an expense, not an investment. I've seen very few, like you buy an online.
Whereas even in the ULIP, the mortality charge is an expense. It's not like that comes to you.
The mortality tables used by a particular insurance company would be the same for all their products.
Correct.
It's not that they have different here and different here. It's only different for age groups and different for a particular segment and what they're targeting. But overall, the tables would have to remain the same.
One of the things I think that happened during the endowment days was that even while people were paying premiums of a few thousands, the actual cover was very small, was very limited. Do ULIPs target that? For instance, I mean, I could have in the earlier days of endowment be paying as high as a 30,000 rupee a year premium and have a cover only of 2 lakh, which actually is nothing, given the, even if you take a 10 time of your salary kind of a thing. But you are saying in ULIPs, it can be 5 times of your premium or 50 times. You can go up to
different structures are available. There are structures, products which are available from 5 times to 50 times. So those are the options that are available to a particular person. But yes, the moment in a ULIP, you do increase your coverage, the mortality charges would obviously increase as a straight percentage. So the amount.
But that flexibility exists.
That flexibility exists.
That I can keep increasing it every year.
Yeah. You have the coverage. That's certain products allow that. Certain products do not allow that. But by and large, this is the range that you would get, and what suits you best would be what you should opt for.
We take a short break, but we continue our discussion on ULIPs with Deepak Sood when we return.